everyone, welcome to Trading Hour on CNBC TV 18. I'm Ekta Batra and with me is Prashant Nair. Well, it's turning out to be a bounce back for the markets today. So we're above 10,900 as we speak. We have the Midcap Index, which is doing well. In fact, the Midcap Index itself is outperforming with a gain of around 1.6%. Strong advanced decline ratio to reckon with. So let's see whether that sustains. Currently, around 1,400 stocks advancing to around 300 stocks declining on the Bombay Stock Exchange. Just look at the kind of breadth for the market at this point in time. Extremely positive. It's a thumbs up for Asia. That's possibly percolating down to our markets as well. Lot of stocks in focus. Sun Pharma, one of the top gainers on the Nifty. Lot of cement stocks doing well. Panacea Biotech, which has bounced up around 8% from the broader markets. And something like Max India, which is down post that deal with True North. In fact, down around 10.5% for that particular stock. Hi, Prashant.
Ekta, hi. This is all up kind of a day. It's ably supported by Asia, where markets are broadly in the green. I mean, the dollar is weak, equities are higher, so it's a supportive global backdrop as well. Here in India, I think what stands out is essentially the broader market. So the sectors which Ekta pointed out, sure, I mean, all sectors are actually in the green. There isn't a negative sector in the red at this point. But mid-caps and small caps, 2% gain, I think, on the small cap index, 1.6, 1.7% on the other one. So this is, I think, what would provide a fair bit of heart to people who've been hoping that there is more buoyancy. The move in this part of the market started last week. So far, so good. It continues. I think from the recent lows, I think both these indices should be up about 5.5% or so. I mean, it's still a drop in the ocean as compared to the big cuts that they saw fairly recently. So we'll track that part of the market closely. For now, let's bring in Sudarshan with his thoughts on the market, trading ideas. Sudarshan, morning. Thanks very much. 104 points on the Nifty. What's the trade? Is there one on the Nifty?
Yeah, good morning. Well, it's a remarkable day. And since yesterday, we have had a lot of volatility, and that volatility has finally subsided as the markets have decided to move up. At current levels, the Nifty is a buying opportunity. You keep a tight stop at 10,900, which is very tight. Either this market goes up or we get out of the trade. But it's worth taking that trade on the long side. That's the index for you. And see, we have some overhead resistance higher, 11,000, 11,100. So we trade with a very tight risk management process, but stay on the long side. Individual stocks are also mainly to be bought into. First of all is PEL, Piramal Enterprises, where a buying opportunity is coming. A nice base is being built and a breakout is imminent. The second buy is Axis Bank, which is outperforming the private sector banks. Axis is a buy. And the third is Colgate. FMCG stocks are putting their act together after 2-3 days of confusion. And Colgate is an opportunity here. So focus on mid-caps and buy the indices and stay on the long side.
Sudarshan, morning. What about a lot of the cement stocks? It seems to be really the theme of the day today.
Well, cement is an investment opportunity. All the stocks are bottoming out and suggesting a rally is imminent. I can't talk about today, but for a longer period of time, it's worth buying into.
Sudarshan, thanks very much. Those are trades and broadly a view coming in on the market. So I think there was Axis Bank, which Sudarshan put out. There was Piramal Enterprises, and I think there was one more. But it's essentially Colgate. I think was the third one. But it's a all-up market, so no two ways about what you should be doing with individual stocks either. Okay, let's talk about a couple of individual stocks and sectors. PSU banks are in focus. The RBI has essentially taken out Allahabad Bank and Corporation Bank from the PCA framework, the Prompt Corrective Action Framework, days after fund infusion by the government. Dhanalakshmi Bank has also managed to exit the PCA. That's a private sector lender. Abhishek is here with more on these three banks. Abhishek, over to you.
Well, to begin with, Prashant, you know, RBI has removed Allahabad Bank, Corporation Bank as well as Dhanlaxmi Bank from the prompt corrective action framework of RBI. So, for Allahabad Bank and Corporation Bank, RBI says that the capital given by the government with respect to Allahabad Bank close to 6,900 crores and with respect to Corporation Bank being at close to 9,100 crores is actually sufficient for them to meet the overall target in terms of the capital adequacy ratio, CET1 ratio, bringing down the net NPA ratio and lowering the leverage will actually provide the framework to be not sufficient for them, and that can bring out the banks from pre-CA. For Dhanlaxmi Bank, the bank is not breaching the risk threshold of PCA framework. So that is why Dhanlaxmi Bank has been removed. Just to highlight our viewers, the net NPA as on Q3 for Allahabad Bank was at 7.7%. For Corporation Bank, it was at 11.5%. And for Dhanlaxmi Bank, it was close to 2.9%. So news was largely known. Only fact is that Dhanlaxmi Bank has come as a positive surprise. Let's listen to the management of Dhanlaxmi Bank.
FY20, we are planning to grow at least a minimum of 10 to 12% in our asset side. The CASA is about 31% today. We would like to grow at least to 35% in the year 1920. And deposits, of course, overall growth should be 10%. And advances, of course, as I said, should also grow by 10 to 12%. We may not be requiring much capital, but definitely next year we will definitely be raising capital because we have to grow in the next 2 years substantially the loan book. So definitely we'll be going to the market maybe in the second or the third quarter for a capital.
At this point of time, as far as credit delivery is concerned, we don't have any concern as we have already planned properly. Since we are closing down our Hong Kong branch, the credit which is going to be liquidated there will be available for us to credit deployment within the RWA. Though RWA condition no longer is applicable, still we would like to tread the path very cautiously up to Q1 of the next financial year. See, if you look at our gross NPA was 17.8 and odd, and 7.7 was the net NPA. Now, NCLT and non-NCLT cases, if you look at in Q4, we have targeted for recovery of 2,000 crores, recovery and upgradation together without considering the NCLT.
Okay, so that is a couple of the banks talking about exiting PCA. So you can see all of them spike up. We have some news coming in from Jet. It's up around 1.6%. The DGCA has been informed about Jet Airways grounding a significant number of aircrafts. They have been doing that in the past couple of weeks intermittently, but as of now it is expected to be significant. We don't know the impact in terms of flight cancellations, but this is what we're picking up in terms of the aviation secretary talking to Newsrise. But let's move on. The other big stock in focus is Max India, which is under pressure as the board has approved selling 51% stake in Max Bupa Health Insurance to True North for 510 crores. The deal puts Max Bupa's enterprise value at a little over 1,000 crores with this transaction. The stake sale will be completed in FY20. Let's hear out Divya Sehgal, partner at True North, and what they had to say.
The reason and why this attracted us is point one, we believe that within general insurance, health is the most attractive sector. And what attracted us to Max Bupa is fundamentally three things. One, very strong pedigree. Max and Bupa, which is one of the leading global health insurers. Second, a highly retail portfolio that they've built where 97% of their business is retail. And third, a good quality distribution network. What we have done is that from our understanding of this business and where the management has helped us, we built out 5-year projections. We believe that this business will be profitable in a 3 to 4 year timeline. And we think that general insurance and health insurance businesses should be valued on a PE multiple. So we've done a PE multiple 5 years out and discounted it.
Okay, but the stock under pressure today, so down around 10% currently for Max India. Maybe the stock should come up for you. It's extended in terms of losses. But on to the pharmaceutical space. In fact, I had the opportunity to catch up with the chairman of Dr. Reddy's, Mr. Satish Reddy, and Pankaj Patel of Cadila Health. This is on the sidelines of the BioAsia 2019 conference in Hyderabad. And I quizzed them on their outlook on pricing pressure in the US and overall the entire scenario in the pharmaceutical space. Listen in.
It again depends on the company and their products, right? So some companies, because of competition, because of more approvals which have come in, probably face more price erosion, that would be. But if I generally see the trend in the industry, I think the commentary by and large from most of the companies, including us, is that it's somewhat stabilizing. So it is a very difficult issue which the US government is dealing with at this point of time. I think even yesterday the House hearings have also started, right? So I think about 7 large big pharma companies are going to testify in front of the House committee. So I think it all depends on how the government will view it and how much of a priority they will assign to changing things, right? So because obviously I think there will be some action. That's what we anticipate. In the past, there were some triggers which happened, right? So there was a famous case of what happened in China on the heparin part of it. So way back in, I remember, 2007 or so. That's one of the triggers at that point of time for US to step up overseas inspections, and India also happened to be, part of that overseas inspections. What I think Scott Gottlieb, the FDA commissioner, had clarified was also that in terms of giving some kind of an endorsement for the quality of the Indian products, right? So that it's actually on the good space, right? So which I think is a positive for the industry. That's how we see it.
When Trump is talking about pricing, it's more talking about the pricing of the original drugs and not actually the generic drugs, number one. Number two, what we see in US at this moment is that actually in some products the prices are actually now going up, given that there are a lot of people who have left the market, there is a vacuum and there is lesser supplier, so there is a market, actually prices going up. We clearly see there are opportunities, newer opportunities arising in this market. We believe the prices erosion which has happened because of consolidation of channels is almost reaching to the bottom now, and we would see here from a price stability to price increase. We believe that our pricing will remain stable for the next several quarters. And at the same time, as we are launching a number of new products, we have plans to launch over 40 products this year. So as a result, we would see, apart from that, we would be able to protect our base, but we would also be able to grow the business.
Okay. In fact, your US business did well in Q2. It was around $268 million in terms of sales, and that was aided by drugs such as Androgel generic. But what is the kind of run rate we can expect in terms of the US growth for Cadila in coming quarter?
We would expect that to maintain this kind of run rate, maybe a little up.
Okay, so maybe a $200 million plus $250 million quarterly?
Around that, yeah.
India was down 8% last quarter. There's some restructuring which the company has undertaken for the India business. When does the restructuring get over? What is the growth prospect?
We expect this quarter that restructuring process will be over and we would be back to growth trajectory.
Okay. And what do you mean by growth trajectory?
We would expect double-digit growth.
Okay. Would that primarily be because of a low base, or would it be because of your restructuring benefits?
Because of the restructuring effort, the growth will be higher.
Okay, so that is DRL and Cadila. Stocks are higher. The market is up as well. There is news at the bottom of the screen. So essentially the Supreme Court had given Reliance Communication 4 weeks to deposit 450 crores. And RCom in turn had requested lenders to release 226 odd crores in IT refunds directly to Ericsson. Now the lenders essentially are refusing. Are saying, well, that is not something that that should be done, and I think they are weighing in with their opinion on this matter as well. There is some other information as well. Lenders oppose company's plea for release of 226 crores, so they're in opposition of this particular demand coming in from the company. Not unexpected. I mean, there's a fair bit due to them, so to ask them to refund money to Ericsson, however, I mean, whatever portion of it, was sure to draw some opposition from the lenders themselves, which is what is happening at this point. NCLAT to resume hearing on the 11th of March is what the news is. Stocks up 2 1/3%. We take a very quick break, the first of the show. We come back and focus on commodities. Manisha is going to come in with exactly that in just a bit.